Just about to sell the pound Australian dollar. Limit order placed at 2663, 21663, 21663 to sell the British pound Australian dollar currency pair on the 15-minute chart. Okay, going to call up my limit order in green to sell the British pound Australian dollar at 2166 a frame. Alright. This order is not yet filled. As soon as the price reaches the level of 21663, the order will be filled. I want to sell the British pound Australian dollar using the wave principle. Alright. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders for Helio Wave Trading. Our website is www.24elliottwaves.com. Okay. All right. The title of the video is how, to day trade on the 15-minute chart using the Helio Wave principle. All right. This is a live recording today on the live trading on the 2nd of November 2015. I want to show you here. Here it is, 2nd of November 2015. The time in London is 12:30 p.m. In New York, 7:30 a.m. All right. As I explained to traders, the clock went back 1 hour in New York, so the time difference between London and New York is restored back to the 5 hours time difference, 5 hours time difference between London and New York, because the clock went back 1 hour this weekend in New York, okay? So I'm just waiting for this order to be filled. And in order to apply the Helio Wave principle on the 50-minute chart, one must apply what we call a top-down trading method using the wave principle. So we want to see first, a trading setup or a wave pattern or an Helio Wave trading setup on a higher time frame, and then we switch to another time frame to take the signal and the entry. For the purpose of this demonstration, I'm using the weekly chart to highlight an Helio Wave trade setup. Then I'm switching to the 50-minute chart, for the signal and for the entry. So I'm using the 50-minute chart for my signal, and at the same time I'm using, that's it, my order is now filled, my friend. Okay, this order is now filled here. I am now in this trade at 21663. All right. I want to explain to traders that this currency pair, the British pound Australian dollar currency pair, is not for children. What I remember, that is quite volatile. Okay, it's not for new beginners. It's for advanced traders that know exactly what they are doing. All right. So it's up to you what you want to do. All right, because the risk is quite high for this trade, and the requirements for stop loss is also high. All right, but I will trade it right now. Okay, so we are now in this trade at 21663. Okay. All right. For this trade, I will use 25 pips. All right, 25 pips, not bad, isn't it? Okay, so It's not bad. I will see how it goes. Okay, I'm happy with 25 pips. Okay, it's not bad. 25 pips. This is quite a volatile financial instrument. All right, my friend. I will use instead 30 pip for this trade. 30 pip, 30, all right? Because it's quite volatile. I don't like my stop loss to be somewhere here. I want it to be, okay, at 26693. It's not a good place as such, but I'll leave it here. But it's quite risky a bit, my stop loss. Where I place it now, it's not a good place. Normally, I should place it here. All right, so what I'm going to do, I'll keep my eyes on it. If the price pushing it quickly here, I will, okay, move my stop loss to 21703, all right? So it's quite a lot, but for now, I will use 30 pip for this trade, 30 pip. But you can see that my stop loss is not in a good place, supposed to be up here. But because I don't want to use more than 30 pips for this trade, I'll leave it as it is now, but I will keep my eyes on it, all right, without blinking, all right? So this is what I'm doing here. So I'm in this trade now at 2163, stop loss at 21693, 30 pips stop loss. As I explained to you, normally my stop loss should be somewhere up here, but I leave it where it is now, and I will keep my eyes on it, okay? So talking about how to day trade on a 50-minute chart using the Elliott wave principle, I'm going to bring you back to the, remember the red line here? So here, I'm going to go back now to the weekly chart because I have identified a trading setup on a weekly chart using the Elliott wave principle. I have counted 5 waves. In fact, I would like to recommend traders, a video that I recorded today called How to Improve, okay, the Elliott wave counts like a pro. How to improve the Elliott wave count like a pro. I'll put the link in the description section for you to check it out so you may understand why, okay, I'm looking for an opportunity to sell the British pound Australian dollar on a 50-minute chart using the Elliott wave principle. So check that video and you understand why. So I have counted first wave, second wave on my weekly charts though. So watch that video and you understand why I'm calling this first wave, second wave, third wave, fourth wave, and a fifth wave. So now the first part of the correction is the move from here, okay, in fact from the top here. The first part of the correction after counting 5 waves. Okay, so the first part is from, you see the top of this candle all the way down here. That's the first part. And the price now at 50% Fibonacci retracement level of the first part of the correction after counting 5 waves. So on the weekly chart, we have counted 5 waves. 1, 2, 3, 4, 5. And the first part of the correction, some trader may say from here down here, you can see the price went up all the way here. So it's this section here from the top of this candle here, down here, and the 50% Fibonacci retracement level, okay, is somewhere in this zone, okay, it's somewhere in this zone, okay. Well, in fact, it's this line here, it's this one, it's the orange line here. What I'll do, I'll color it now into pink because I have another orange line on my chart, so I'll color it into pink. That's the 50% Fibonacci retracement level of the first part of the correction after counting 5 waves. That's the pink line. So this zone here is a resistance zone. So, all right, now this is my trading setup. We are at a resistance zone. So we are in a resistance zone. In order to sell, we must see bearish chart pattern. This is a kind of the first signal to us that there are some people selling. All right. So we are at a resistance zone, talking about the area wave principle. We are at a resistance zone. This is my trading setup. Now I switch to the 50-minute chart, and what I'm doing on the 50-minute chart, I'm using the 50-minute chart as my signal and also as my entry. Pay attention to this trend line here, okay? You see, there was a high here. So this high here, I joined this high and this high, okay? Allow me to draw the blue line. You see the blue trend line here? So price came here, found a resistance. First, so here you see, now it touches here, found a resistance, come down, come here again, find a resistance, come down. So there are some people selling on the edge of this blue line. Here they are again. This has been going on for some time in this zone of 50% Fibonacci retracement level of the first part of the correction. So this is why I decided to place a limit order here to sell the British pound Australian dollar currency pair. As you can see, the price going back up now. So I promise you, keep my eyes on this trade because my stop loss is not in the right place, but I will not move it until the price is quite close to me, all right? But I'll leave it as it is now. I have a reason for it, all right? So some people are selling on the edge of this blue line in a resistance zone. I'm not the first person to sell. Some people are selling. I have noticed that they has been selling, and I joined them to sell here. Okay. Normally, I want to place. I could place my my limit order below this low here, but I don't want to. I place it at okay, 21663. Okay. Somewhere there, 21663. Yeah, somewhere in that zone, okay? That's it, 2163, okay? That's where I sold it. Now I'm in this trade, my stop loss is at 2193. Okay, so that's it. All right? The reason why I sold it here instead of placing my limit order here, I'm expecting the price to do something like this. Okay, that's it, come down like this. I'm expecting it to do something like this without going here and to come down. Okay, to come down. Okay, something like that. Okay, that's my expectation. Doesn't mean that the price will do exactly what I'm expecting, but there is a high chance that it will do something like that, slowly but gradually, even going down more. Okay. As I told you already, this currency pair is not for children. I can also draw it, okay, to set my target for my greedy target for this trade. So you see it was in this blue channel. So if it comes down out of the channel, I can project my channel in the direction of the price if it comes out of the blue channel. Okay, this is about how to day trade on a 50-minute chart using the wave principle. All right, so probably I will see my entry at 21663. Okay, if it come near the zone, I will take my first profit. Somewhere if it come near the zone, I will take my first profit. All right, then I will wait again. If it come out of this blue channel, out or hit it, I'll prefer something like this. Come out of the blue channel, come out and retest, and then continue to go down. All right, something like that. This is my expectation. Okay, now you see it. And now I'm combining the market geometry in the blue channel. If it come out, if it's not yet out, okay, I'll project the channel. The channel is already here. But if you go to the other side, we'll project the channel in the direction of the price. But now this is my expectation. So I'm now in this trade. Okay, let's remove this line and focus on my trade, because I need to monitor this trade carefully, okay, until I get paid nicely, okay. All right, so now we are in this trade. We enter the trade on a 50-minute chart. We are using the 50-minute chart as our signal or entry at the same time. My entry, you can see, is based on the candlestick. So you see prior rush down. Some people sold it here. It went down. And you can see that as he was trying to rally up in this session, we have this shadow on the top. People start selling it. So price went down very fast, and as it's trying to go up, some people were selling. You see the shadow on top of this candle. That's why I placed my limit order below here to sell. Pay attention to the blue, this bullish candle here, this one, okay? All right? So that's why I sold it. So I'm now in this trade. What I'm going to do now, my friend, I'm going to go to the 3-minute chart to zoom into this, because I want to monitor what is happening here and to see what's happening. But to avoid that the video is too long, my friend, I will pause the video and I will come back to it and show you what is happening here. But before I pause the video, I need to mention to trader, this is the gap period. We know that around, if you are trading forex, around 1 p.m. London time, we have major economy news that can change the dynamics of the market. So what I'm doing here is a little bit risky, but I'm in charge of it. I'm making my own decision, and I know exactly what I'm doing. But you have to understand that in exactly 50 minutes, it will be 1 p.m. in London. This is the time when we have, okay, some high impact economy news. Okay, so be aware of it. But I will leave this trade on, and we will see whether I'm going to get paid or not. I'm going to call out now my vertical line in turquoise, as I always do. And before we pause the video, we are now on the 3-minute time frame, and I'll show you the time in London. It's 45 minutes past 12 p.m. in London, and in New York, 45 minutes past 7 a.m. in New York. As I explained to you, I'm willing to move my stop loss somewhere above here if the price is coming near my stop loss, because my stop loss is quite conservative. All right, so pausing the video for the first time, and I will come back to it to show you if it's coming near my stop loss, what's going on here. Okay, so you may see it, okay, on the live chart. This is a live recording talking about how to day trade on the 15-minute chart, okay, using the alien wave principle. Pausing the video for the first time, and I will speak to you very shortly after 18 minutes recording. Okay, traders, let's continue. As you can see, we pause the video here. Okay, where I placed the vertical line, the price went up and went down. Now it's going back up again. Okay, so that's it. That's what's going on here on a 3-minute chart, okay, of the British pound, Australian dollar currency pair. Okay, if we go back again to the 15-minute time frame, okay, you can see that nothing has changed as such on the 50-minute chart. Okay, price went down, and we saw it here. Okay, at 21663, placing our stop loss at 21693. Okay, so we will see. All right, gently. Hopefully, we'll see some action very soon, because I don't want the video to be too long. Okay, going to go back again to the 3-minute time frame, and we give it a chance and see okay, what's going to happen here. All right, okay, my stop loss is at 21693. okay, expecting it to break to come back down here. All right, as I explained to trader, this is what we call the gap period. Okay, when the market is expecting economy news. But I will let it run and see. Okay, I will see what's going to happen. pay attention to this tall candle here. All right, there's a high chart that we may see very often. You see here, we see a tall candle here in this session here. There is a high chart that we may see again another tall candle very soon. Okay, in this session. Okay, we'll see. All right. So what I will do, I'll pause the video again. All right. I'll place my vertical line here, and the time in London is 1 minute past 1 p.m. In New York, 1 minute past 3 p.m. We just go now to the Forex Factory, and okay, www.forexfactory.com, and to check which economy news are due now, coming up, click on calendar right here. It's loading calendar, and today is Monday, the 2nd of here it is. See here, where are we? Monday, the 2nd of November 2015, and we are looking for the time. The time that you are looking at here, this is the New York time. So you can see here it's showing 9:30 a.m. Eastern time. That's 2:30 p.m. London time. So we have Royal Bank of Canada manufacturing PMI, the final, okay, manufacturing PMI, United States, and another high impact news at 3 p.m. London time. So remember that today on 3 p.m. at 3 p.m. London time, okay, ISM manufacturing PMI, United States. This is a high impact news that the market is expecting. So the market will be adjusting, the forex market will be adjusting itself up to 3 p.m. London time. That's 10 a.m. Eastern time. So the economy news that is due in an hour 30 minutes as New York is about to open is the Royal Bank of Canada manufacturing PMI. We had this impact news bullish for the pound. Here it is, you see here, already released at okay 4:30 a.m. Eastern time. That's 12:30, okay, p.m. London time. Already released, bullish for the British pound. Okay, so you can see that it's bullish for the British pound, but we didn't see any reaction here because the market is paying attention to the news that is due at 10 a.m. Eastern time, 3 p.m. London time. So as I explained to you, this is the gap period, and you need to control the risk gently. All right. So let's pause the video and come back to it and show you what's happening here. So okay. So pausing the video for the second time after 22 minutes recording. Speak to you soon. Okay, traders, what's happening here? Okay, as you can see, it's working beautifully. The price returned back below my entry point. We pause the video right here. And as you can see, just going down nicely. See now at this support level. We're expecting it to go down more. Okay, to go down more fast, something like that. That would be beautiful. Because I want to tell traders that I don't want the video to be too long. And also, I have an appointment, so I want to show you what's happening here. The key point to understand in this video is that bearish chart pattern are likely formed, okay, on or near a resistance level using the Elliott wave principle on a weekly chart. We have counted 5 Elliott waves, and the first part of the correction, which is the price going down in this session here, the 50% Fibonacci retracement level of the first part of the correction is usually, okay, a resistance level. I recommend to traders to watch the video that we call How to Improve the Elliott Wave Count Like a Pro. The link is in the description section, so you may understand why I qualify this trading setup, okay, as a high probability trade setup, okay, using the wave principle. So using a top-down trading method, we have the setup on the weekly charts. Price is at a resistance zone. That's the setup, okay? Now, on the 50-minute chart, we are looking for bearish chart pattern or weaknesses in the, okay, in the price action. So we have noticed that paying attention to this blue trend line, traders are selling each time the price is on here, this trend line. Okay, so I set my limit order at 21663 to enter the trade. The price came down, okay, and I entered the trade, okay, and now we are in the trade, okay. My stop loss is 30 pip for this financial instrument. 30 pip is not enough as such, but in this case, I must keep my eyes on the price and monitor the trade carefully, all right. I was prepared to move my stop loss, but there was no need for it because the price did not come near, and my stop loss is now below my entry. So I may have to close this video at early stage. Hopefully we'll see some price reaction. I got another 6 minutes or so before I leave this place. So hopefully we'll see some action before we wrap it up. Okay, I was using a 50-minute chart for my signal and for my entry at the same time. I want to clarify that for my entry, I use very often, okay, the candlestick patterns, how the price is behaving at the point where I want to enter. All right, I pay attention to the tail of the candlestick bar and also the shadow. The shadow on top of the candlestick bar are highlighting that people are selling. Okay, see here, selling on the edge, and the tails is highlighting a support level. So you see this bullish candle here, okay, on the 50-minute chart. It was one of a strong bullish candle on the 50-minute chart. That's why I placed my entry below it, because if the price goes back below this low, it's a weakness. And here it is, it's going down, okay, so far. I'll go back to the 3-minute time frame. I got like 5 minutes left, so far so good, my friends. So far so good, okay? So it's all about managing the trade so that a winning trade does not become a losing trade, or we minimize the risk or cut the loss, okay, and let the profits run, okay? The most important thing is to understand how to day trade on a 50-minute chart using the Elliott wave principle. So we detect an Elliott wave pattern or an Elliott wave trading setup. Then we go to a signal time frame and the entry time frame to enter the trade using what we call a top-down trading method. I'll also put a link of a video about the multiple time frame trading method. So check it out so you may also understand what we are doing, all right? You want to sell, professional will always sell at a resistance zone, at a key level, and they will buy at a support zone, at a key level, very, very important. So when we see a setup or a signal and we are about to enter the trade, we want to verify that we are at the support level or resistance level, at the key level or not, and we must, though we use technical indicators such as stochastic, RSI, CCI, the price is the #1 indicator. If people are selling, the price will tell you that they are selling. They are buying, the price will tell you. And you don't want to violate also, okay, the market pattern. Here you can see that there's a weakness developing, okay, weaknesses developing here on the edge. People are selling. And now because they are selling on the edge of the blue line, price start falling, displaying what? Okay, lower highs and lower lows here. So a high, a lower high, a lower low. It must now go below this low to confirm the bearish momentum. So, okay, I saw this here, and we should go below this low if the bearish momentum is strong. I got another 3 minutes, okay, my friend. Then I will have to close this video because of an appointment that I have, okay, today. So I'm under a time pressure, but we will see whether we will see something. The most important thing, I want traders to see this live trading so they may learn from what I'm doing and they may also criticize what I'm doing, all right? So we will pause the video for the third time and give it another, 3 minutes or so, and I will wrap it up. And hopefully, okay, you will find it useful. So before we pause the video again, I'll place again my vertical line on the last candlestick bar. I'm now on a 3-minute time frame. And the time in London is 32 minutes past 1 p.m. In New York, 32 minutes past 8 p.m. Remember, today at 10 a.m. Eastern Time, 3 p.m. London time, we have a high impact news. That's why there was no reaction after this economy news relating to the Canada economy. The market is waiting for the high impact news at 10 a.m. Eastern Time, 3 p.m. Eastern Time. Using the wave principle, one must always combine the wave principle with the economy news, the fundamental, without violating the market pattern. That's the best way forward, okay? So pausing the video for the third time, and we'll wrap it up very shortly. Speak to you soon. Okay, traders, this is the end of this video. As you can see, I have to go now. So I would like to give it more chance, but I'll stop the recording because I have to go. All right, thank you for watching. Okay, and we will speak to you very shortly. This is about how to day trade on a 50-minute chart using the Elliott wave principle. If you like this video, please give us the thumbs up. If you dislike it, give us the thumbs down. If you love it, feel free to share it on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to day trade on a 50-minute chart using the Elliott wave principle. Okay, speak to you soon.